Hello, welcome to the European Open briefing for Thursday, August the 10th. I'm Rafi Berjan, currency analyst at XM.com, and we're going to be looking at the latest developments in the currency markets today. So we still have quite a bit of risk aversion in financial markets this morning. This is due to ongoing tensions between North Korea and the United States. So we're still seeing strong demand for safe havens such as gold, the yen, and the Swiss franc. Although the yen and Swiss franc are off their highs, the New Zealand dollar is down today after the Reserve Bank of New Zealand maintained its neutral stance at its monetary policy meeting this morning, and we had some remarks from RBNZ policymakers regarding the strong Kiwi, and so that drove the Kiwi to 4-week lows. The pound is also under pressure. It's back below the 1.30 level against the US dollar ahead of some UK data releases later today, while oil prices, they are firmer this morning, although overall they are pretty much capped within recent ranges. We did have a bigger than expected drawdown in US inventories yesterday, but let's begin with what's happening with North Korea. We can see gold prices, they did hit a 2-month high of $1,280 an ounce a short while ago. There's still a lot of tension between North Korea and the US, although many analysts do not see the threat of a military conflict. It is still highly it's a very uncertain scenario because North Korea did say that they will be striking 4 missiles into the sea near the US territory of Guam in the next few days. I mean, that's unlikely to happen, but then again, it is still a possibility, so that is still unsettling market nerves. We can see, though, that the US dollar has risen marginally against the yen and the Swiss franc. Here in the chart we can see the dollar Swiss franc and the euro Swiss franc. Yesterday they both fell to 2-week lows against the Swissy, although USD CHF is up 0.5% this morning and euro CHF is up 0.6%, and we still have seeing US global equities coming under pressure, although US equities yesterday they did rebound sharply before the close to close the day just very slightly lower, but in Asia markets most bourses were in negative territory. Moving on to the dollar, yen, and the dollar index, we can see in the chart that dollar index is not doing too badly. It is up at 93.70 this morning, but dollar yen, we can see it's not too far off from yesterday's 8-week lows of 109.53. It is currently struggling to regain the 110 level. US Treasury yields also recovered. The 10-year yields did drop to a 6-week low yesterday of 2.21. They're fluctuating around 2.25% this morning. There was some mixed data out of the US yesterday. We saw a bigger than expected increase in wholesale inventories. Productivity numbers for the second quarter were also good, but labor costs rose by 0.6% versus expectations of 1.2%. We had Fed Speaker Charles Evans, the Chicago Fed president, speaking yesterday. He said that he expects balance sheet reduction plan to be announced in September, but he also cautioned that the Fed should be careful in assessing future rate hikes, meaning the Fed is still not in too much of a rush to raise rates given the current setback in inflation. We have another Fed speaker, William Dudley, due to speak later in the day. Let's look at what's happening with the Kiwi now, because we did have the RBNZ announcement. They held rates at 1.75% as expected, and we saw a bit of a rebound in the Kiwi. It rose to 0.7371 against the US dollar before reversing sharply lower to touch 4-week lows of 0.7249. The RBNZ statement wasn't as dovish as some had been expecting, and they didn't use too strong stronger language against the strong Kiwi. So that's why we saw the Kiwi rising soon after the statement. But then we had the press conference by the Governor Graham Wheeler, who said that the Forex intervention remains an option for the RBNZ should the Kiwi appreciate sharply. We also had an interview by Assistant Governor John McDermott, who reiterated the views on the exchange rate, saying that the RBNZ is slightly more uncomfortable with the current value of the Kiwi than it was back in May, so that's why we're seeing the sharp fall in the Kiwi after those remarks. Also, the RBNZ signaled that a rate hike is unlikely to come before 2020, so it's looking like the RBNZ will be on hold for quite some time yet. A quick look at the pound, because the pound has come under pressure. It had actually managed to, it had shown some resilience in recent days, even after last week's Bank of England meeting, but it has now dropped back below the 1.30 level. We did have a Reuters poll out earlier today showing that the expectations for the next rate hike remain unchanged in 2019, and the Bank of England meeting last week didn't do really anything to bring forward those expectations. Against the euro, the pound is off yesterday's 10-month lows, although euro pound is still above 0.90. The euro we're seeing is consolidating its gains. It's also below the 1.18 level against the dollar. Regarding the pound, we do have a number of UK data releases of the next week. Starting today, we've got industrial output and trade numbers, and it's going to be a very busy day next week with inflation and retail sales and jobs numbers. So we could see the pound coming under further pressure. Looking at oil prices, because yesterday's inventory numbers out of the US showed a bigger than expected drawdown of 6.45 million versus expectations of 2.72 million barrels. We saw WTI crude, it is now approaching $50 a barrel, although we do have a strong resistance at that level. The gains are being capped by a big rise in gasoline stocks, which were up by 3.42 million versus expectations that they would drop by 1.48 million. And we also did see a renewed commitment by OPEC and non-OPEC alliance this week regarding their output deal. But overall, markets remain concerned by the slow decline in the oversupply, in supply glut. Brent crude is doing a little bit better. It actually managed to rise to 2.5 months high of just above $53 a barrel. Looking at today's economic calendar, we did have machinery orders out of Japan, which were actually quite disappointing, raising some concerns about the economic recovery there. We had French industrial output numbers, and that will be followed by the UK ones. And later in the US session, the focus will be on US producer prices. And we also have William Dudley speaking at 14 hours GMT. That's it from me. Thank you very much for watching, and have a great day.